Good morning, everybody. It is Friday. It's July the 17th. Here's what's on the agenda. Stocks drop as the chip sell-off continues. Brent near $85 is on track for a 12% gain this week. And sources tell Bloomberg incoming UK PM Andy Burnham will signal support for North Sea drilling and nationalised water within days of taking office.
Two major catalysts for the downside when it comes to these markets. Risk off across equities then, Anna, today. Reflected in the Nikkei this morning with the Kospi closed over in Korea for a holiday. The Nikkei down 4.7%. Are we starting to see a bit of panic selling in Asia? Is this looking a little disorderly? The two key catalysts are concerns about semiconductors. You saw that overnight on Wall Street. And, of course, as you said, Anna, what's happening in terms of the Middle East and high oil prices. Currently, Brent at around $84 a barrel, but in double digits for the week in terms of the gains. Of course, Euro Stocks 50 futures then on the back of these catalysts, negative catalysts, pointing low by 0.8%. The countdown to the opening trade starts right now.
Welcome, everybody, to the opening trade. 7:01 then here in London. And, Tom, let's start with the selling that we've seen on the technology theme once again. It might be Friday, but there's not much of a Friday feeling when it comes to tech stocks. And we don't seem to need the Kospi. We don't need the South Koreans to be trading, to be at their desks, to have a lot of negativity around tech stocks and a lot of volatility around tech stocks. So we haven't got the Kospi, but we've got the TAIEX and the Nikkei firmly in negative territory. Also, the Chinese tech themes playing out this morning. And it's difficult to pin this on any one thing, isn't it? It's difficult to work out where this all started. I mean, just in the last couple of days, of course, we got those numbers out of TMC, SMC, which I know you talked about yesterday. Maybe the CapEx theme has had some time to marinate through markets, and I'm not really sure what we're looking for there, because there does seem to be a Goldilocks story around CapEx. If it's too hot or it's too cold, then the market seems to be spooked. We add into that Oracle, what we've heard from S&P on the credit rating at Oracle, the Google story from our colleagues at Bloomberg that they're months behind on Gemini, and it all adds up to something a little bit risk-off when it comes to tech.
It suggests and it underscores that there is nervousness amongst investors that have exposure to the semiconductor story, given what we've seen in terms of the drop for the semiconductor index in the US. The Philadelphia Semiconductor Index is down pretty significantly. You have individual names in Japan, like Kioxia, which is down, significantly. It's down about 50% from last month's peak. Taiwan and the Taiwanese index is being hammered today. The Nikkei is being hammered. There is this. It feels a little different today, even as we can't necessarily point to one particular catalyst. It feels like a confluence of events that investors exposed to tech, AI themes and semiconductors are thinking about, and it's looking a little bit more disorderly, and that maybe is a concern leading into the weekend.
And disorderly without the single stock ETFs that are that we talk about in the Korean context. Of course, they are listed in Hong Kong as well, and that adds up to more negativity and more disorderliness, perhaps, because we've got futures in the US down by 1.6% on the Nasdaq, so that's worth noting. But in terms of next week's Kospi, we're closed today. We are looking at Hong Kong listed single stock ETFs around SK Hynix, and they're down more than 10% in today's session, despite record outflows on Thursday. So there's a lot of negativity there that seems to be storing itself up for the Kospi on Monday. So it doesn't even seem as if this disorderly picture for tech is entirely Kospi driven or entirely over.
You mentioned CapEx concerns from TSMC. Another couple of factors that fed through in terms of the news flow yesterday, just briefly, in terms of Alphabet. This is reporting from Bloomberg that they will be delaying the release of their most up-to-date model, Google Gemini 3.5 Pro, by at least a couple of months. So you saw Alphabet shares dropping. And then you had the release as well of a Chinese open source model by Kimi, which is on some metrics reportedly at levels similar to those being released by Anthropic. So that was another factor that maybe someone are looking to as well. But we also have to think about what's happening in the Middle East, because it is these two factors that markets are focused on right now. It's the chip story and it's what's happening in the Middle East. Continuing conflict there between the US and Iran, not at the same level at the start, of course, of the war between the US and Iran, but the attacks continue, and the flows through the Strait, at least the flows that we can monitor, again, shrinking essentially to nil, and no evidence that the two sides are getting any closer to an off-ramp. And as we lead up to the weekend, with oil prices up about 12% through this week, that is clearly another risk factor.
It's interesting what impact this has on investor sentiment around equities, around inflation, around everything, because if you're pretty risk on, you look at oil at $83, and actually it's tracked downwards just in the last hour or so. But if you look at that and you think, well, this is, 73% of its peak price, so we're well off the peaks, and you say, well, that's what really matters. But then if you roll in crack spreads, and Garfield on the Markets Live blog has been doing this, Garfield Reynolds, and he rolls in crack spreads on top, and he adds that on top of WTI in his case, and then you come up against a figure that's, you're something like 90% off the peak price. So you're actually much closer to the peak if you include the cost of refining. And that's what takes us out of the Middle East and adds in what's been going on in Russia as well. All of that adds up to a global nervousness about a lack of refining capacity, which means maybe this week's CPI print, which was, of course, weaker than expected, was that giving us too much comfort around CPI? And actually, with crack spreads doing what they're doing and having the impact that they might have on the energy space in the US, maybe we'll be back to talking about inflation again.
That's the real world impact. The refined products, that is the real world impact. That's the political risk for President Trump as well. And that is potentially putting already that inflation data in the US in the rearview mirror. Is that as good as it gets if this attrition continues and we continue to see those higher prices in terms of refined products? We're also thinking about UK politics as well.
Yeah, absolutely, because Andy Burnham is going to become the leader of the Labour Party today. That seems to be the run of things. So we're expecting that, and he's then going to, in the future, become the Prime Minister. Of course, we know that too. What is he going to do in week one? And there was a lot of criticism, given the amount of time that the Labour Party had whilst the Conservatives were in power to prepare for office. There was a lot of criticism that they didn't maybe hit the ground running. And so is this going to be a Prime Minister who wants to hit the ground running? Well, certainly our reporting overnight suggests he has high ambition in that regard, preparing to announce North Sea drilling, a backing at least symbolically or otherwise for North Sea drilling and public control of Thames water. Now, how does that fit against the public consultations that are going on around North Sea drilling? How does that fit against arguments about whether water companies should be temporarily or permanently made and nationalised? Who knows? But it's at least at the signalling level, this would seem to be important because, as I say, this has been the criticism that's been levelled at the Labour Party government.
The IMF as well coming out with a suggestion that he avoids, Andy Burnham and the new team, avoids putting up rates on higher income earners in the UK from 45 to 50%. Now, Burnham has said he's going to stick to the manifesto, which includes commitments around not increasing income taxes. But he has in the past suggested that 50% on top earners would be something that he would consider. Yeah. The IMF weighing in on that. We still don't have any cabinet positions filled. There's a lot of speculation, of course, and we had reporting on this yesterday that Shabana Mahmood will be the new Chancellor. That hasn't yet been confirmed. No cabinet positions yet. And so it's going to be a very busy weekend for the incoming Prime Minister, again, as he's expected to take that leadership role at some point.
Yes, I know we've got some breaking news, which you're going to get to next, Tom, but just to close out this part of the conversation, looking at that IMF report, there didn't seem to be much in there that the Burnham team would like very much, because they were suggesting that you should actually increase the rate of tax on lower paid in the UK instead of the top earners, and I'm just not...
Which arguably politically is more challenging for a Labour Prime Minister than raising taxes on high-income earners. Talking of high-income earners, we're getting lines crossing right now from the luxury company here in the UK, Burberry. First quarter retail composite sales coming in at an increase of 5%. That is below the estimates. So it's a miss in terms of comp sales, at least in the first quarter for Burberry. We know they have faced challenges, this company, a turnaround plan. And right now we're seeing first quarter retail comp sales coming in below the estimates. Not significantly below, but it is a miss on that level, at least. In terms of what we're seeing out of China, a crucial market, of course, for the broader luxury space and for Burberry. First quarter Greater China sales increasing 9%. That is below the estimates of almost 10%. In terms of EMEA, contracting 3%. And Burberry saying they are mindful of uncertain geopolitical and macro environment, which ties us back to what we've been talking about in terms of the geopolitics.
Asia-Pacific broadly, but not China, seems to be the area of weakness against the estimates. We'll get back to the luxury goods story later in the programme. Let's tell you what is coming up on today's show in terms of the guest conversations we're going to be having. Sonali Punani will join us, Bank of America Global Research Chief UK Economist. So the perfect day to speak to her about the UK, given the political changes. Beata Manthi, Citi European Equity Strategy Head. Also interesting things to say about UK equities, but also the broader European landscape. We'll also speak to Mal Crease, the Kraken Technology Group CEO. So this is a defence conversation, very timely, given pressure on budgets there across across Europe. And Claire Barkley, Microsoft's EMEA president and of Enterprise and Industry, and crucially chair of the UK government's Industrial and Strategy Advisory Council. Again, an important voice to weigh in today as we look at a change of leadership in the UK.
Let's get a gauge in terms of what else we are thinking about and looking at throughout today then. The World AI Conference is currently underway in Shanghai. President Xi Jinping has been speaking there for the first time, interestingly. The UK Labour Leadership Special Conference takes place. Of course, Andy Burnham will officially be confirmed as head of the Labour Party later today. French President Emmanuel Macron and German Chancellor Friedrich Merz are continuing a two-day summit in Germany. 3 p.m. UK time, University of Michigan Consumer Sentiment Survey will cross, and later Fed Vice Chair Philip Jefferson will be speaking. There's been a bit of Fed speak overnight as well, so more commentary on where the Fed should land as inflation, at least on the most recent data, looks a little bit benign, with all the caveats, of course, of higher energy prices in the immediacy.
Coming up, SpaceX shares fall after it scrubs the latest launch attempt of its Starship rocket. We will discuss what it means for Elon Musk's company. Plus, we will take a look at the stocks to watch at the open, including Volvo Cars, the Swedish company reporting second quarter revenue below estimates, but forecasting a stronger second half of the year. So that stock and many others in focus this morning. Up next, we'll be speaking to Michael Metcalf, head of macro strategy at State Street Global Markets. How stretched do positions around equities look right now? If you have any questions, if you want to get involved in any of these conversations, I believe IB plus BBTV Go is the function on the Bloomberg terminal. Yes, it is still sunny in London. This is Bloomberg.
Welcome back. We are about 45 minutes away from the open this Friday. It's risk off across your equity markets. European futures pointing low by 0.9% after modest gains yesterday for European stocks, up 0.2%. US futures also in negative territory, and a rough session over in Asia with the MSCI Asia Pacific Index down 2.8%. Heavy losses over in Japan and Taiwan as well. So US futures, Nasdaq 100 futures pointing low by 1.6%, and European futures now pointing to losses of close to 0.9%.
So tech, big theme this week. Oil prices also a big theme this week. And so we get an update from the Middle East. The US has carried out fresh attacks against Iran. The Gulf nation responded by attacking US bases in Kuwait, Jordan and Bahrain as hostilities across the Middle East continue to escalate for another night. Shipping traffic has slumped across the through the Strait of Hormuz, with oil set for its biggest weekly advance since April. Let's bring in Ona Ant, Bloomberg managing editor for Middle East and North Africa. Ona, bring us up to speed on what's the latest here, because on the week oil prices are higher, even if they're a little bit weaker this morning. We've had 6 consecutive nights of these strikes.
That's right. Thursday marked the 6th consecutive day of U.S. strikes and Iranian retaliation, which is now expanding in size and scope. Just a couple of minutes ago on the terminal, we were looking at headlines coming out of Oman, where Iran seems to have targeted various sites. That's in addition to earlier strikes on Bahrain, Qatar, Kuwait and Jordan further to the west. So, and there are hardly any signs of negotiations taking place at this stage. It was the White House and President Trump that's been saying over the last few days that Iranians want to reach out and are in search of a deal to bring the fighting to an end. But that narrative is inconsistent with what's coming out of Tehran, where the lead negotiator, Mohammad Bagher Ghalibaf, has said that although he did defend in general negotiations with the US, he said the Islamic Republic doesn't see itself in a position to really commit to the interim agreement that was signed last month. Now, having said all that, I think in previous rounds of escalation, we have seen that these breakthroughs, when they happen, if they happen, they almost always come out of a blue when President Trump announces them on his social feed. So that is the wild card here as we look at what is next in this latest and very serious escalation fighting between the US and Iran, Anna.
OK, Bloomberg's Ona Ant in Dubai with that update. Ona, thank you. Let's bring in Michael Metcalf right now, head of macro strategy at State Street. Good morning. Happy Friday, Michael. What's the bigger risk for these markets right now? Is it the energy shock out of the Middle East, if we call it that, at $85 a barrel, a little below that today in the session, or is it the sell-off that we're seeing in the semiconductor space?
Well, look, it's both. And it's connected, obviously, by the inflationary impact on rates and how that deteriorates the macro environment and getting us back to talking about stagflation again. And look, I think on the tech side, obviously, it's going to be earnings news and how markets react to them.
Is stagflation a real risk at this point? I mean, you touched on it. Is that how seriously are you taking that as a risk for markets?
Well, look, so obviously we talked a lot about stagflation in March. The shock actually proved to be transitory, and now we're a little unsure of just how transitory it is. I mean, look, we've already seen, certainly outside the United States, we've seen big downgrades to growth expectations already. And look, it may well be now that, and as your reporter said, this is now a new wild card as to will inflation come back down or will it now go back up? I think stagflation could easily come back into the narrative a little bit.
And you've got you look at trends through, is it price stats, Michael, that helps you understand what's happening with pricing at the Fed and the ECB? I was talking earlier on in the programme about if you get something slightly different, looking at crack spreads versus just crude prices, and I wonder what all of that means for your inflation expectations.
Yeah, so what we're able to do is we capture prices online. So we already have inflation for the first 15 days of July. And the thing that we're really focused on, obviously, is how do retail fuel prices respond to higher oil prices? And here's the thing. So the way the inflation data is calculated is it is a monthly print. And so right now, for July at least, energy prices are still lower than they were on average in June. And so, I think you get a pass for a month for oil prices not to impact. And then beyond that, and so, you're now thinking about the August inflation print. That's when we might see higher oil prices today pass through into printed CPI, which is what the Fed will worry about.
OK, that gives us a sense of how long it takes for these things to filter through.
Yeah.
And thinking about the other dominant theme in markets, and we've touched on it, around the AI trade and everything tech. I mean, how stretched, how extended is the sort of optimism around AI stocks right now? Or do you think actually it isn't? Because we've seen such a pareback in the Kospi, in the Philadelphia, semis index. Some of these are down substantially now.
Yeah, I mean, look, because it was so stretched at the start, it's going to take a little bit of an unwind to get us back to levels that you wouldn't consider stretched. And so, look, just top down, equities relative to bonds, investors' holdings of equities are 30% above bonds. Obviously a 60-40 portfolio, the average would be 20%. And so, the overweight in equities and optimism in equities is still very substantial. The one thing I would say about tech, though, which I think is interesting, is that while we're seeing an unwind in semis, actually we're currently capturing a rotation back into tech hardware and software, and so that seems to be for the moment a healthy rebalancing rather than a let's leave the sector. Okay,
so maybe that's a comforting thought, because I wonder what it is we're looking for as the next kind of signal on tech, and capex gets mentioned a lot. So, but do we get a sense that maybe we're looking for something quite Goldilocks on capex? It's got to be not too weak that we worry about whether the capex cycle is going to be sustained, but also not too hot that we worry that people are spending too much too quickly. Is there anything we can look for really around the capex trend that'll help us understand what's optimal?
Yeah, I think it's really hard, and the reality is trying to sort of put a number on what optimal is, I think will be very difficult. The key, I think, for us is to look at how investors react to the earnings announcements.
Yeah.
And also, if you get what looks like good news and the stocks don't react positively, then that's just a sign that investors are full and overextended.
And a couple of those this week.
And we've had the odd little flag in that sign, but it would be seen something like that more broadly. And then from behaviour, it would be that investors aren't just reducing their exposure to semis, they would do it across the entire sector. And so that's a bit we're not quite seeing yet. But I think that's a good way to frame the capex question.
What's your level? So, two examples at ASML and TSMC both coming through with headline numbers very strong, and then ultimately investors selling off at the end of the session. And today TSMC is down heavily. What is your expectation that we start to see a kind of rotation out of? You've talked about the rotation out of chips into software. Do we start to see a more healthy broadening out as we rotate maybe out of those sectors and into other parts of the equity space? Is there and how much conviction would you have that could continue and that would be a healthy dynamic?
So this is where your first question, I think, comes back in and is creates a bit of a near-term challenge. So, I think in sort of January and February, we definitely had that kind of trend of moving a little bit away from tech and into more cyclical sectors, for instance. I think the challenge now, if we're uncertain about this wild card of the oil price, that's going to short-circuit that a little bit. And I think there'll be a slight concern that in that environment, if that continued, that investors will rotate out of tech into cash.
What do you do with UK assets at this point?
Well, interestingly, UK assets, I think, have performed pretty well given the political changes that we're currently going through. I think there's an assumption that this won't be a market issue, but obviously we're going to learn quite a lot in the next couple of weeks to see whether that assumption is right.
We certainly will. Michael, thank you very much. Thanks for joining us. Michael Metcalf, State Street Macro Strategy Head. Tom.
Here's what else you need to know this morning then. President Trump has accused China of interfering with the 2020 US elections in a primetime address where he repeated unsubstantiated claims that the election was stolen. A 2021 report by the US intelligence community concluded that there were no indications that, quote, any foreign actor attempted to alter any technical aspect of the voting process in the 2020 US elections. Trump made the allegations months ahead of a planned visit by Chinese President Xi Jinping. Netflix shares fell in extended trading after it forecast a second straight quarter of slower revenue growth. Sales are expected to reach $12.9 billion, slightly below Wall Street estimates. As investors question the platform's growth trajectory. The streaming giant is betting on new offerings like live sports and video podcasts. It's also touting its use of generative AI to cut costs and speed up content production. SpaceX shares fell in late trade as it scrubbed the latest test launch of its Starship rocket. CEO Elon Musk says some of the rocket's Raptor engines didn't fire, triggering an automatic shutdown. He says the next attempt will probably happen early next week, with 2 of the engines to be replaced. This was the first attempted launch of this particular rocket since the IPO, and the stock is now trading below the IPO price, which, of course, was $135 a share.
Yes, so this has become a market-relevant event now, watching these launches, which is a break from the past and really interesting for us. And it's interesting that we have, with SpaceX stock suggesting it'll open lower, and we have US futures pointing lower. There are other reasons for that as well, and the tech sell-off that we've talked about already is part of that. So this mission aborted. It's a key part of getting data centres into space, that they are able to make Starship viable, isn't it? It's also part of their going to Mars strategy, of course, as we've talked about. But they also have NASA contracts to send astronauts to the moon using Starship. So there are sort of lots of reasons why this matters to the SpaceX business case. I mean, maybe the data centres in space part is the biggest thing, and we'll ask Matt Bloxham about that a little bit later on.
And I think for the IPO story, with reports that Anthropic is starting to lay the groundwork potentially for an October listing. We know they filed confidentially, of course. This raises a question. If you're back below the IPO price at SpaceX, is this still a conducive environment in which to list for Anthropic and for OpenAI? And again, the reporting suggests that OpenAI has now pushed their planned IPO back to 2027. Yeah. But how much does that weigh on the minds of executives at Anthropic? How much of a read across is there if you're back below the IPO price?
Yes, I'm sure. Yes, it's interesting though, on the glass half full side, I was thinking this is a business that needs to prove that these rockets are reusable, isn't it? And this one didn't explode. There was a fault and there's a delay, but it didn't explode. And so maybe if you're looking for silver linings, maybe that's one. 7:26 in London. We'll come back to UK politics. Incoming UK Prime Minister Andy Burnham is set to outline his plan for the nation to some degree in a speech later on today. He's going to become leader of the Labour Party today. We'll discuss the economic impacts of that with the Bank of America chief UK economist. This is Bloomberg.
Thirty minutes from the start of the opening trade this Friday, European futures are pointing lower by 0.6%. It is risk-off across the equity markets. US futures also in negative territory. Here in the UK, FTSE 100 is called lower by a little less, in fact, just by about 0.1%, certainly less than the other benchmarks in Europe. The CAC current is called lower over in France by around 0.8%. So that is the picture. It is negative. 2 key catalysts. It's the sell-off in semiconductors and concern about high oil prices and continuing conflict in the Middle East.
Yeah, so it does look as if we'll see some weakness then in Europe. I wonder how the luxury numbers are going to go down as well, seeing what we're seeing there on the CAC 40. Let's talk about the bond market story. And there's not a huge amount of movement today, as you can see. You've got to go out 3 decimal places to find some basis points movement on European bonds this morning. But maybe useful then to think about the direction of travel in the week. And during the week, we have seen, certainly the beginning of the week, we saw yields going higher in Europe and just recently coming down a little bit, but not back to where we started the week. So the direction of travel for the week has been, with oil prices, higher yields, and that seems worth remembering. Now, the IMF has warned incoming UK Prime Minister Andy Burnham that raising the top rate of income tax would hurt the economy, instead recommending higher rates on the lower paid instead. The statement comes as Burnham prepares to deliver a speech today outlining some key policies, his first since becoming leader of the UK's Labour Party. He's set to be given that title today. We're joined now by Sonali Punani, who's a UK economist at Bank of America. Sonali, nice to speak to you. Thank you for coming to talk to us. So I wonder whether the incoming administration will take anything from this IMF report. I mean, as an economist, do you think about maximum taxation levels? Is that a concept that rings bells with you? Are you looking? Is that part of your framework when you look at what the UK can do fiscally?
Yeah, I mean, I think the key question for the administration is that how much money does that tax actually raise, and can that be done with a little political cost, right? I think the problem is that if you take out the 3 main, taxes out of, and, say you're not going to raise any of them, the amount of money that you can raise in these small taxes is very, very small. And then I think markets also worry about the fact that whether they are credible, whether they raise the amount of money that these taxes are going to be raised, or is it going to lead to behavioral changes that might actually be worse for growth. So I think the administration has to really look very carefully at the taxes that they want to raise and see how much money they can raise from them and what the behavioral consequences of that is going to be.
Yes, I think the IMF has a line on taxing wealth, because that's something that Andy Burnham has talked about in the past, and does suggest that is quite difficult, or it's quite difficult to guarantee that you will get the money that you estimate from wealth taxes. So in terms of fiscal rules, where does this leave the UK? Because you say, Sonali, in your notes something intriguing, that yes, in the short term they will be met, because we've heard those assurances from the team, but this may get complicated in the medium term. What does that mean? I
mean, I think it means that, I think what we are hearing from the administration is that they're going to meet the fiscal rules, but then we are also hearing all these demands or all these things or ambitions that the government has, which is a social, council housing program, a lot of spending on infrastructure. And if you look at how much headroom exists within the current fiscal room, it is quite small, and quite a lot is going to be eaten up by the fact that we obviously have the conflict, and we need to give some support for the energy crisis, that the households need to be given support. Obviously, the bond markets have moved, yields have moved against the headroom. So there's very little space fiscally for the government to do the big ambitious programs that they want to do. I mean, it's just that, it's not a prediction, obviously. I mean, obviously, the bond markets would really prefer if fiscal rules are met, or if any flexibility is used within the fiscal rules, they are used fairly limited, right? So they can borrow a bit more, but maybe not a lot more in order to spook the markets. But it's just something that I think the fiscal risk premium is going to stay unless, the government is very, very credible and is very, doubles down on those fiscal rules.
Well, the current Chancellor obviously tweaked her own fiscal rules. You touched on this. Is there scope for the incoming Prime Minister and this new cabinet to adjust the fiscal rules around things like defence in a way that would be acceptable for the markets?
Look, I think taking out defence at this point from the fiscal rules would probably be a bit difficult, just because I think the UK's fiscal position is really, really being analysed quite a lot by the markets. I think what the fiscal rule does allow you is, because the debt measure is a net financial liabilities, PSNFL, it does allow you to net out some financial assets. So maybe they can take some debt and then net out some of the financial assets so that the overall debt numbers don't get affected by it. But what the markets would care about is how much gilt issuance there is. So even if you kind of try to tweak the fiscal rules, it's going to mean more gilt issuance. And I think that they can maybe accept a small amount of more gilt issuance. But if it's a very large program, then I think that's something that might lead to a market reaction.
Well, the BOE could help by not selling long-dated bonds. What are they doing? Why are they quantitative tightening in this environment? It's not helping the government. What does the BOE gain by selling long-dated bonds into this market?
Yeah, I mean, look, I think the Bank of England has a framework where they do want to get down their balance sheet as soon as possible. We can argue whether that's the right framework or not, but that is what the Bank of England is wanting to do. I think their motivation is that they don't want to have the interest rate risk on their balance sheet, right? So they basically are selling these bonds in order to be able to reduce that and then maybe able to use the balance sheet again in a crisis, because right now the balance sheet size is quite big. So supposing we need to do QE again, it'll be quite hard to do it with this size of the balance sheet. So they do want to reduce it. I think the pace at which they are doing QT is, has been slowing down. They did slow it down from 100 to 70. Let's see the decision in a few months' time about what they do for this round. But I think their analysis is that it doesn't really lead to much. Their QT program has not been the reason for why gilt yields are higher than others, and that's their analysis. And I think they're going to probably stick by it, rightly or wrongly.
What's the market expecting from the Bank of England now, Sonali? Because I know that you don't see any hikes from the Bank of England, despite the fact oil prices have gone higher this week. Maybe just good to get an update on that. And is that because of a limited pass-through to domestic inflation? What is it you're watching for?
Yeah, I mean, I think the key thing right now is, of course, the oil prices matter, but I think what the key thing that the Bank of England is looking at is how much is this oil price rise feeding into domestic inflation. And, we get inflation numbers next week, so they will be quite interesting to see. Our sense is that the Bank of England, we did have hikes before because we thought that, like the ECB, the Bank of England is going to be fairly proactive and kind of do like a bit of a precautionary hike. But it does seem like because bank rates are restrictive, they think that they're at 375. They would have cut otherwise had this crisis not happened. So that gives them some room to wait and watch and to assess the impact. So for me, the risks of a near-term hike are higher than the risks of a near-term cut, even if oil prices go down where we were a few days ago. Even then, I would think that the risks of a hike are higher than a risk of a cut. And now I think that even more. But I do think to push them in that direction, they would need to see proper evidence of second-round effects, whether that's in wage expectations, whether that's in core inflation. I think they need to see that pass-through happen before they react and raise rates.
Wages have been cooling, haven't they? To your point around second-order effects.
Yeah, they have been, but we did actually do a piece in on the labour market looking at what was the sectors driving most of the wage slowdown, and there are very, very few sectors driving it. So, and actually, about 60% of employment of sectors still have wage growth above 3.5%.
Okay,
so we're not out of the woods yet on that one.
Sonali, thank you very much indeed. Sonali Ponnani, Chief UK Economist at Bank of America. Now, Wall Street bank bosses are weighing in on the costs of implementing AI across their firms. Take a listen.
Like with your firm, we pay you a subscription, and inside you have the Bloomberg, Ask Bloomberg, or whatever the AI capability. With other firms, we did the same thing. And so, will that hold forever? I don't know. But for right now, we're not seeing a big cost increase. And so we expect to spend more on it, but it's more about implementation.
That was Bank of America CEO Brian Moynihan speaking to Bloomberg as earnings season, of course, gets into full swing. More on that next. This is Bloomberg.
The market's really trying to discern is whether or not it's priced to perfection. And so I think that there's been an exceptional amount of earnings strength.
Admittedly, a lot of good news is already in the price, so that's why we are seeing some pullbacks, particularly in Asia, where a lot of leverage players are involved. But if you can sit through it, we think that for the next 12 months, this earnings momentum is right.
Earnings will probably be pretty good this year. And you might be surprised at that because an energy crisis is not normally conducive to European growth, given Europe doesn't have energy independence. We import so much. But on the other hand, we've got a lot of commodity stocks in the index.
The macroeconomic drivers of the CapEx cycle, the risk-on mentality, capital investment, pretty strong to be able to get in the way of right now.
This earnings season will be positive until or unless an hyperscaler says they're cutting their CapEx plans. But however, every single hyperscaler earnings call, I will be listening very attentively. And if they ever say we're actually going to significantly scale back on our CapEx plans, that's the AI trade over.
In this earnings season, there is a heck of a lot of expectation into this earnings season. So it's often better to travel than to arrive. If we're right about the inflationary outlook at this moment in time, which is benign, we're right about the earnings outlook, which is decent, then yes, you should start to think about buying those dips and buying them hard for 27.
A few of our guests this week on whether global stocks can continue to build on earnings strength. SpaceX shares, meanwhile, falling in post-market trading after a planned launch of its 13th major Starship mission was scrubbed at the planned liftoff time. Smoke erupted from the launch tower, as you can see, while the rocket remained in place, which is obviously problematic when you're trying to launch a rocket. Let's get more from Bloomberg Intelligence senior analyst Matt Bloxham. All of this, of course, happening at a time when the stock price for SpaceX is back below its IPO pricing. Talk to us about the impact of this cancellation.
Yes, the Starship is their next generation of rocket. It's got at least 5 times the capacity of Falcon 9. It is the future of SpaceX, no question. It's central to the investment case because it's the platform which will allow them to create this massive network of orbital data centers, and they need the orbital data centers to create the capacity for their big AI plans. The massive growth in future revenue is based on AI. So, if they can't get Starship working as a scaled, reusable rocket launch platform, then that whole AI story kind of starts to unravel a bit. And obviously their plans to send people to the moon for NASA and onto Mars for Elon Musk's massive payout in a few years, potentially, a critical, Starship's critical to that too.
Well, Matt, on the upside then, it didn't explode. It's
exactly.
got to be reusable.
Just a minor malfunction.
Yes, just a malfunction, and they're going to reschedule it. How should we think about this in this new world then, where this becomes a stocks relevant event? We watch these launches and we wonder what this does to, the SpaceX share price, but also then to, listings in the States, to overall indexes in the States. Are the weightings small enough that this doesn't cut through that much, or do we have to think of it differently?
I think right now they do. I think it's very much a kind of SpaceX-specific story. This is hopefully just a small delay in it, but a delay pushes out the kind of momentum behind the trade. And obviously, they need positive catalysts to underpin the share price. And, I guess from their perspective, hopefully get it back above the listing price and way beyond. So, the fact that there are delays and issues just kind of holds back the story, if you like.
Is Netflix streaming these launches yet? Maybe that's an avenue for them. What's going? Let's pivot to Netflix. Yeah. What's going wrong with Netflix? They used to be the big disruptor of the TV industry, and now they are getting disrupted from YouTube in particular, and to some extent from TikTok. It's the classic thing where there's huge competition for our engagement. Engagement is still growing, but only very softly. That engagement grew 2% year on year, which is a slight improvement from earlier 1%, but it's not enough really to kind of make people feel that Netflix is the kind of the big entertainment beast. They're spending huge amounts of money on content. But they're kind of pivoting. That they had an aborted attempt to kind of buy a big production rival. They're investing in live TV. They're investing in short form video. They're buying video podcasts. They're diversifying their business. I think people are thinking, okay, the strategy now is quite different to what it used to be. Is this the right strategy? Are they doing this from an offensive or defensive position? I think people feel it's defensive, and I think they're not convinced yet that they've got it quite right to kind of keep YouTube and TikTok and the other competition in check.
The market for engagement. Matt, thank you very much. Thank you very much for joining us, Matt Bloxham from Bloomberg Intelligence, with some of the tech themes that are playing into markets. And let's take a step back and think about the broader markets today in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore, who is in London this week. Mark, good morning to you. So the tech theme, how would you sum up what we've seen and how it plays out into next week? We've got a lot of hyperscaler earnings next week. I've become obsessed, as you were in that clip we just showed, on CapEx. But you think it's a bad thing if CapEx falls. On the other hand, it was a bad thing in TSMC numbers when CapEx went up too much. So I wonder if we're looking for something kind of Goldilocks on CapEx.
No, I think the reason my bias is on CapEx falls being negative is because, as you know, I think we're in a massive AI bubble. So the question is where we are in that AI bubble. And I still think we're not in the bubble popping, even though the price action. We were on the show yesterday, we talked about how we expect chip stocks to fall into next week. But I actually think probably next week will likely be the end of it because we'll get the Hyperscaler earnings. I'm going to explain that in a moment, because my bias is all the earnings so far shows that we're not cutting back in CapEx yet, and we're not seeing significant cuts yet. But I think when we see those plans start to change, that's the end of the AI trade, and it all goes wrong. To me, my bias is still as it's been since May, that we're in that volatile endgame. And as I said, in prior bubbles, that volatile endgame has tended to last 6 months. I have no idea if that's a standard thing, because we've got too few kind of sample size to kind of check if that's standard. But I think that's, I kind of go, it's likely the next earnings season. Now, the one qualifier where I say likely, and maybe this is the bubble popping, is that, interesting enough, and I think this, I only just noticed about 20 minutes ago, and I haven't seen it much else there, token revenues, token cost fell to a 3-month low again yesterday. And that turnover from the end of June is kind of matched with the chip stock strain, and that's kind of putting pressure on the capex plans. And so maybe that's an early indicator that this actually price action reflects a non-public change in fundamentals, as in maybe there are more conversations happening on closed doors about cutting capex that haven't been announced yet because of that fall in token expenditure. So sometimes what happens in markets is price action actually leads the public fundamental change, and there's a risk of that, but I don't think so. The earnings so far imply we're still getting capex expenditure.
I mean, maybe this is Chinese competition as well. There's a lot of that.
As you talk about the falling token costs, remarkable stats in Bloomberg reporting showing that US companies now, 60% are using open source Chinese models. 60% of US companies are using open source because of that massive price differential versus the frontier labs.
Ultimately, this is a commoditized service for the vast majority of stuff that's going to happen, and that's why this is why I think it's completely ridiculous AI capex bubble. That's why the whole underpinnings is slightly insane. It doesn't make sense, but it's when it turns.
Is there a world in which, though, the bubble doesn't burst, but money rotates and it broadens out and you get greater depth, and that we have a comfortable rebalancing?
No, in terms of this specific bubble. And I think the bubble is the capex plans. So I'm not saying stock markets have to collapse, because lots of stocks aren't cheap, right? But the point is that the most important stocks have been very expensive and based on this AI capex. So indexes will suffer, but so the bubble will have stock market implications, yes, and they'll be negative. But what I'm saying is the intense point of the pain. Like Korea is a good example at the moment, and again, I don't think that's popped yet. But the dramatic collapse of Korean stocks that yet have seen like a pretty marginal dip in kind of global indexes is kind of what I expect, just scaled up on a global basis when it pops. But it is an AI capex bubble rather than a stock market bubble. And so it's when that AI capex bubble happens that all the KAI sector suffers. They're the biggest name in the index. They're the most dramatic, so it has pain across the index.
Okay. Bloomberg Markets Live Executive Editor Mark Cudmore. We've enjoyed having you on set this week. Remember, you can get up-to-date analysis and insight from Mark and the rest of the team. Just go to MLIV Go on your terminal. Let's bring in Chloe Melly now with your stocks to watch this Friday with an eye on luxury. Chloe.
Yes, absolutely. Good morning, Tom. We are starting with Burberry this morning because it reported sales growth across all of its ranges for the first time in 3 years. And there was particular strength actually in the US market. So this confirms that this ongoing turnaround at the luxury company is working. It has been working now for a few quarters. And it's also a very interesting echo of what we heard from Richemont earlier this week with this particular strength in the luxury US market, even though some other markets are seeing some weakness. It is worth noting that Burberry did flag that there was still some uncertainty related to that geopolitical situation. So that might be a slight negative, but we could see this pretty good update this morning boost the shares this morning, especially after Burberry has been underperforming that broader luxury market over the last month or so. Moving on now to the car making industry, which is in trouble, very much so. Volvo Car has said that the second quarter was marked by a considerable weakening of the Chinese market for both the company itself and that broader car-making industry, which is dealing with those higher costs, that higher competition, and that lower demand. And so we could see that really, weaken the shares even further this morning after that 30% drop so far this year. And this comes, just after we had this Volkswagen restructuring plan as well. And finally, let's go over to Nordic banks. And we've got two very different stories this morning. Danske Bank in Copenhagen has boosted its guidance because of this very strong momentum across the business, whilst Swedbank in Sweden has missed net interest income estimates because of lower mortgage margins in its domestic market in Sweden. And so we are seeing this quite mixed picture across the Nordic banking industry so far this week. We have a very big week of banking reports next week, so we'll see what they say really about the health of that industry for this earnings season.
Chloe, thank you very much. Chloe Melly with some of the stocks in focus this morning. Thanks to Chloe, and I'll add into the mix the defence sector. We'll keep that in focus. Saab reporting operating profit for the second quarter that beat the average analyst estimates, and I've seen expectations that this stock goes higher at the start of trade. Demand for defence and deterrence capabilities remained strong during the quarter, according to the management over at Saab.
And we'll be speaking to a player in the defence space, Kraken, of course, a startup in defence with a focus on autonomous ships later in the show, so that will be an interesting one for you as well. Worth noting that Taiwanese stocks are now fell into correction in the Asian session. Also worth noting that the miners may be under a little bit of pressure. Copper is currently down around 1%, so potentially watching miners as well. Gold remains just below $4,000 per troy ounce. Brent is back below $85, but still up about 0.1%, and WTI is closing in on $80, about 79.28 on oil, and what is happening in terms of the continuing conflict in the Middle East, Anna.
Yeah, there wasn't a huge amount of movement on the European market overall yesterday, was there? And we were quite evenly divided between sectors that went higher and lower, and basic resources were, in yesterday's session, that was the worst performing sector. So to your point about what happens with copper prices, we continue to watch that and whether that has any impact. So we're watching the dual themes, really, of higher energy prices.
Yep.
We're around $84 right now, so not a huge amount higher this morning. But watching that, and of course the tech selling.
And what is frankly a rout in terms of the semiconductor stocks. And you saw that overnight on Wall Street, and you saw that certainly in Taiwan and in Japan, with South Korea closed, of course, for a holiday. Coming up then, it is the opening trade. As we've been talking about, European futures pointing lower by 0.8% after the modest upside of yesterday. We'll get the breakdown. This is Bloomberg.
Welcome back to Friday's opening trade. A couple of minutes then until the start of European cash equity trading. And this is the handover from the US yesterday. We'll take this with a pinch of salt, though, because when we get to the futures picture, you'll see we're looking pretty negative. And part of that does reflect the selling that we saw during the US session after we closed here in Europe yesterday. So there is that to factor in. We were weaker on some of those chip stocks over in the States, and the wider tech theme certainly weak. And then that carried on into the Asian session as well. But maybe that's more of a steer, because we've got quite a lot of negativity, even outside the Kospi, because the Kospi is closed today. Quite a lot of negativity coming from Japan, from Taiwan, from China. Plenty of negativity around tech themes, and all of that adds up to some futures that for the European markets, Tom, are looking kind of weak. Are we going to have some added themes to deal with? Because actually it seems that the French market is weaker than some of the others. So DAX futures down by 0.5%. The FTSE 100 looks a little more resilient, and Euro Stoxx 50 futures down by 0.7%. What are you watching on the stocks to watch?
Well, we'll see if the FTSE 100 gets any kind of lift from Burberry, because it saw some decent numbers across its key sales regions, so particularly at the US. So the luxury goods maker, of course, based here in the UK, listed on the FTSE 100, seeing sales in the Americas growing 12%. So some suggestions that the turnaround plan is starting to bear fruit for Burberry. So watch that stop. Chick stocks, of course, in focus. What a rout we've seen over in Asia, and the sell-off overnight in the US as well, with the Philadelphia Semiconductor Index continuing to slide. Volvo cars in focus. They're talking about a pretty tough environment, particularly in China, and so they have scrapped their target of selling more cars this year due to a sharper than expected deterioration in China. So we watch that stock as well, Anna.
We were pretty evenly divided between the sectors going higher and lower in yesterday's session, but today does look as if it's going to be overall a pretty negative session for European equity markets, at least as we start things off this Friday morning. We will see where the day takes us. But the Stock 600 then, waiting for that to open. And I see the FTSE 100 is flat to positive right now, but doesn't look to have got quite into its stride. Although we are expecting that the FTSE is maybe somewhat resilient to the negativity around tech, and that seems to be the dominant theme coming to us from, yes, the US session of yesterday and the Asian session. So we're down by 0.2% on the Stock 600, but without many of these markets having opened up. So we're waiting for opening prices on the DAX, the AEX, the CAC 40, the IBEX. There we go. A tech weakness theme certainly signalled by the fact that the AEX is down by more than 1%. So we'll certainly keep an eye on ASML. Are we seeing any negativity there? And Tom, I know that this was one of the companies we've been focusing on a lot this week, with the numbers looking seemingly pretty good. The stock went higher, then eventually selling off and then bouncing again on the TSMC numbers, which in themselves themselves didn't go down very well with investors. So a lot of complex themes, it seems, coming to us from the tech sector.
And the pain is certainly being felt in tech, and ASML is one of those names, currently down a little over 4%. So ASML, and that is a significant move lower, obviously, for a company with this kind of market weight. So across your sectors, ASML is a drag on tech. That is your biggest loser right now as a sector, currently down 1.8%. Basic Resources, which came under pressure yesterday as well, with the worst performing sector yesterday, Basic Resources continues to sell off, currently down 1.5%. We're seeing copper prices dropping, and that will be a factor there. Geopolitics, of course, and what's happening in the Strait of Hormuz continues arguably to be a factor. Food and beverage currently at the top of your list, up 1.2%. And so you're seeing about six sectors in positive territory, Anna. Majority seeing losses, and tech, the biggest downside coming through for that sector right now.
Yes, indeed. I'm just drawn to a red headline that picks up on a theme that we've been talking about earlier on in this week, of course. This is Japanese Prime Minister Takaichi talking about the GPIF, the GPIF, the pension fund, investing in Japanese assets and calling that a key initiative. So we'll be watching what this does to Japanese bond markets, seeing a bit of movement there, but we will see how that plays out. We've been tracking this, haven't we, all the way through the week, Tom, and getting really interesting steers as to whether they were going to actually rethink where the GPIF was going to invest or not. That was seen as something that could influence the yen as well, but this is taking us a little bit off topic of the European market open. But it just struck me as interesting that that red headline just dropped across these markets.
There's a modest move for the yen, 162.22, so up a tenth of a percent versus the US dollar on the back of these comments. We have, of course, it is going to be a holiday in Japan as well. So we have seen historically, in recent history, that holidays in Japan have been used for intervention. Verbal intervention has not been working so well. So we'll see if they actually intervene. But this has been a key part of the signalling, is whether or not this giant pension fund will have greater exposure to Japanese assets.
Yeah, will there be more ability for this fund to buy JGBs? Will it be incentivised more to buy JGBs? We're actually seeing some buying at the short end of the JGB curve, it would seem, this morning. So we'll keep that under review. Let us turn back to what's happening on the European equity market picture then, because tech selling is certainly the big theme for European stocks this morning. We see that writ large over the AEX. We see that in some of the sector moves that Tom was just talking about. Let's talk to Beata Manthi, European equity strategy head over at Citi, with us on set this morning. Beata, nice to have you with us. So, yes, you joined us on yet another down day, but let's not let that put us off, Beata, because I know that you are constructive. Is this constructive on European stocks, constructive on stocks globally? You're constructive on stocks to some degree?
It's really constructive on global equities, but not over the next week or two, but over the next 6 to 12 months, right? And really what is happening right now in the market, we have to put it in the context of what has happened in the past few months. So global equities are 10% up in the first half of the year, despite all the negative news flow that we've had and potential economic shock via higher energy. And yet we are up, right? Major indices around the world are hitting or are close to all-time highs. So some pause was really inevitable. And of course, as we've been coming out of this economic potential pressures via higher oil, the market has started to hope for some broadening, the long-awaited broadening. Now, for that to happen, you need to have some rotations, and rotations tend to happen in quite a violent way sometimes, and this is what we are seeing right now. So, stepping away from the near-term volatility, the question is, over the next 6 to 12 months, do you want to own stocks? And the answer is most likely yes.
Okay, and so to see broadening then, Beata, do we have to see some reasons to be excited about things other than tech? But do we also have to see tech underperform then? Is that a feature of broadening? And we shouldn't necessarily see that as a huge negative then?
Yes, in theory, yes. So you should have two conditions. Number one, you need to see signs that from macro fundamental perspective, this broadening to other sectors is plausible. We are seeing a lot of that right now. And the other one is, of course, you should see tech being on pause, but not really selling off too much, not to drag the market down, right? So there is still a question mark how this is going to resolve in the very short term. But in terms of the signs of broadening, City economic surprise indices picking up everywhere. In Europe, actually, the strongest deltas, and historically, that correlates quite well with a relative outperformance of Europe, and that has been happening in the past few weeks for other reasons as well. And then what is the most encouraging, and that's the most encouraging, especially in Europe, but is happening around the world, is the dynamics, the latest dynamics in the earnings revisions. So the direction of the analyst forecasts, are they upgrading or are they downgrading? So earnings revisions actually have been picking up for a few weeks, but they've been picking up until recently via just upgrades to tech or commodities. So what we are seeing right now is interesting. So we have three dimensions of positivity. Number one, the levels, actually European area on Monday has hit almost all-time highs, so 30%, only a handful of times was it around these levels or higher. So from that perspective, you could say, well, maybe it's not going to go much higher as we are almost there. But there comes the second dimension, which is breadth. So 80% of sectors in Europe are seeing upgrades right now. And this broadening we are seeing in other sectors around the world, and it tends to be a good lead on outperformance of cyclicality over the next 3 to 6 months. And the final, very important, all of these upgrades have been happening against negative seasonal trends. So in pre-reporting season, 4 weeks into the reporting season, you should start seeing downgrades. We've been seeing big upgrades, and again, that's a good lead on upgrades continuing.
If what we're seeing in the Strait of Hormuz becomes the new normal, how does that change what we're seeing in terms of the earnings story and the macro data that is supporting that?
Well, it really depends what's the level of oil we are going to stabilize on, right? It's still a surplus market when it comes to oil around the world. So clearly, this right now the market has other problems to worry. If oil stays at around 80-90, it's going to have some drag on the economic variables, right? So perhaps this city economic surprise indices are not going to go much higher. This is why the market is worried. But the question is also how long it's going to last. So what do you mean by new normal, right? We won't have that happening forever, what is happening right now. So
yeah, that's okay. So 85, 90, it's not great, but it's not a disaster. But corporates can live through that.
Correct.
They have that resilience. Which parts of the European equity space do you expect to see the most aggressive upgrades on earnings, given what you're seeing right now?
So the interesting thing is 80% of them are seeing upgrades, right? Still, the biggest upgrades are happening in tech, also around the world. This is also the reason why I am not convinced that the way forward is completely to step back from tech, right? Because perhaps tech becomes part of this broadening. It's not the only sector that you see you need to have in your portfolio, but it's part of cyclicality that you want to own. And in Europe, financials. These continue to see very, very strong upgrades. And to us, it continues to be an overweight, European banks. And it is one of these more interesting anti-AI trades, right? So it has reasons to move higher on its own, irrespectively of what is happening in the AI trade.
Yeah, you don't feel quite so positive about UK stocks, or at least you, before this recent rally in oil prices had been put off, but partly because they've done so well because of the commodity exposure.
So one thing they've done so well, it's not a downgrade on its own, right? What we've done in the global portfolio, we've swapped the UK for Japan, which if you, over the next 6 months, if you see signs of broadening happens into cyclicality, and Japan has many cyclical drivers that could push it higher. The UK will do well in this type of environment, but because it has so many defensive weighting, it's not going to outperform the other regions that are more cyclical. That's it, simple as that. But within the UK, we definitely like the cyclicality, right? So the UK banks, basic resources, which I know are getting a bit of a beating right now, but it is another broadening trade that potentially will start picking up again.
Beata, always a pleasure. Thank you for coming in this Friday. Beata Mante, Citi European Equity Strategy Head. Talking of individual equities or names to focus in on. Let's bring you the core 6 right now. There's some movement in the defence space. There's some movement, of course, in luxury. So my eye is drawn to what's happening with Rheinmetall, currently down 1%. It's a different picture for other players within defence today. Luxury is a little softer, at least for LVMH, down 1.2%. Novo Nordisk in the drug space just off by 0.2%. But the biggest name that really stands out is ASML, given its market weight, the most valuable European company, currently down 3.9%. And that is despite, of course, earlier this week coming through with some very strong earnings. So some caution again for ASML and the impact being felt for that company as a result of the risk-off sentiment around semiconductors. Let's get a check on some of the other individual stocks on the move this Friday. Chloe Melly standing by. Chloe.
Good morning, Tom. So, yeah, as you were mentioning, ASML is seeing a lot of weakness this morning, and it's really the same across that semiconductor sector as we are seeing this broader chip sell-off as investors are really questioning whether those lofty valuations still make sense for those semiconductor companies. And so we are seeing ASM down the most there, more than 4.6%, but ASML, BE Semi, Infineon, we are very much in the red and quite deeply in the red across that semiconductor sector this morning. Interestingly, we're also in the red for Burberry, down almost 4%, despite actually having quite a positive update this morning and flagging particular strength in the US market. But perhaps the investors were expecting sales growth to come in ahead of expectations rather than just in line. And perhaps some of that cautious outlook around the geopolitical environment is also weighing on sentiment a little bit. And so we're down quite a bit actually there. We're also in the red for Volvo Cars, which has flagged that there was weakening demand, very weakening demand in China, and that it scrapped its sales growth target as a result of that. It doesn't bode well, of course, for the rest of that car making sector, which has been dealing with those higher costs and that higher competition from Chinese car makers as well. Analysts have said that this is going to be the lowest point for this latest quarter for Volvo Cars. So things might start to get better moving forward. Moving on to Nordic banks, and we are also in the red there after Swedbank actually reported a net interest income that was below expectations. And then Danske Bank, interestingly, it did boost its guidance, but we are also in the red there. And finally, let's end with one positive mover. And we've got Saab in the defense sector moving up, being in the green this morning after second quarter operating profit. It came in ahead of estimates, and it has really benefited from this continued demand for military capabilities. And so we're up almost 3% this morning for Saab.
Chloe, thank you. Chloe Melly with those stocks that are moving this morning. Coming up, something else that has been moving this week. Oil is heading for its biggest weekly advance since April as energy supplies continue to be disrupted by the Iran war. We will look at the outlook for crude next. This is Bloomberg.
Welcome back to the Open Trade. We are 16 minutes into today's session. Across the European Stock 600, you're seeing losses of 0.6%. The most acute selling coming through for the tech sector. And we've seen that over in Asia and the US overnight as well. And the handoff, of course, to Europe, negative. So tech is selling off and pretty aggressively, currently down 2.2%, Anna.
Let's talk about the luxury sector because we've had some numbers out from the luxury space. Burberry, specifically, shares are lower after the British luxury fashion brand reported growing sales across all of the ranges for the first time in 3 years, with robust demand coming from the US. While sales are increasing, the industry as a whole has seen a major downturn exacerbated by the war in Iran, of course. Let's talk to our luxury reporter, Angelina Rascare, who has more details for us here. So there's sort of the war-related story here. There's the Burberry specific, and there's a lot of interesting regional breakdowns. Let's start with the latter then, Angelina. What's driving the stronger performance coming out of the US?
Hi, Anna. Indeed, basically all regions grew, and except for the Europe and the Middle East, but it was led by the US. The US, and we've seen yesterday with Richemont, definitely the strongest region. Typically, when it comes to luxury spending, you also have to look at equity markets. And if equity markets are strong, the US consumers tend to spend more because they feel good about the future, about their savings, their investments, and therefore they spend more. So 12% that was very strong for Burberry. However, on the flip side, and that's what's maybe driving the share to be down 4% now. Europe and the Middle East down. The region overall was down 3%. Had it not been for the conflict, it would have been down 1%. That's what they said. So it's not only impacting sales in the Middle East, which is a relatively tiny region for them, the Gulf, but it's also affecting tourism spend in Europe. So maybe that's what's maybe investors wanted something stronger from that side.
So they cited geopolitics, didn't they? Is there a broader read across for the luxury sector from that geopolitical hangover, from the constraints and the impact that we're seeing in the Middle East, and what this means for luxury?
I mean, yesterday we got results from Richemont and they were very good. But Richemont is in a different category because they sell essentially, Cartier and Van Cleef, they sell hard luxury, and typically in times of volatility, of uncertainty, we have a war 4 years ago. Also, we also had a war in Europe. We have a war in Europe. So people seem to appreciate putting their money and spending in gold products. And actually, Richemont did okay in the Middle East. Burberry, as we're seeing from the numbers, is still feeling a drag from the lack of spend or the lower spend from that region and those consumers. So we'll have to see for the rest of the sector. But also we have to remind ourselves that Burberry is in a turnaround phase. They appointed the CEO Joshua Schulman 2 years ago. He's modifying the strategy. He's putting front and center the outerwear category. And actually they did relatively well with the rainwear. They launched a campaign about portraits of an icon, about the trench coat. Beautiful portraits, black and white, with celebrities, British celebrities like Kate Moss. So that seems to have attracted customers. So he seems like he's doing the right things, but maybe this turnaround will take longer than expecting amid all this volatility and uncertainty.
Okay, Bloomberg's Angelina Rascouet, thank you for that update on the Burberry earnings and the broader read across as well. Let's switch focus from luxury to oil now. Oil is headed for its biggest weekly advance since April as the escalating conflict between the US and Iran disrupts supply chain flows from the Middle East. Investors now looking then to how a persistent disruption on oil supply will impact global energy markets. Let's get more from Bloomberg Asia energy reporter Stephen Stupczynski. Stephen, we were talking to Beata Mante from Citi earlier, and she said, look, it's all about, in terms of the impacts on corporates, it's all about the timing, how long this persists, and if we stay between 85 and 90, that's manageable. If this is the new normal, Stephen, what should we expect in terms of what we see in terms of oil flows and prices? Is this still an oversupplied market?
I think it depends on how you describe oversupplied, because I think if you look at different regions and different fuels, it paints a more nuanced picture. So in Asia, right now Asia is, at least for crude, somewhat oversupplied. Buyers had been preparing for this since March, and they had found replacements for the next few months. So they're basically covered. And when you look at what the Middle East has been offering, they've been having to offer their fuel at a deep discount. So that oversupply for crude barrels isn't really going away. There are fears that it could get tighter. There are different parts of the world that are tighter, but I think you also have to look at different parts of the barrel because all oil is not just crude oil. When you refine it, it's jet fuel, diesel, gasoline, and that's where you see a tighter market and higher prices and some of the fears, because there is refining capacity within the Persian Gulf, and that could be squeezed to a degree. I think one other thing that's being closely monitored is what happens with the Bab el-Mandeb Strait, which is that small waterway that gets through the Red Sea into Asia. And that's how Saudi Arabia has been able to reroute a lot of its oil through the East-West pipeline out of the Persian Gulf and into the Red Sea to its customers, about 7 million barrels per day. Now, if that were to be disrupted, which there are reports that Iranian officials have asked Houthi rebels to do so if their power infrastructure were hit in U.S. attacks, then you start to see a bigger fear, because the market has been able to digest the Hormuz disruption to a degree because of the workarounds. You take away one of the workarounds, suddenly it is a much tougher situation later in the year for crude.
Stephen, thanks very much. Thanks for the update. Bloomberg's Stephen Stapczynski keeping across all of the energy-related stories and what the developments in the Middle East and indeed in Russia mean for those markets. Let's pivot to some US politics. Tucker Carlson was once one of Donald Trump's most prominent allies. The US-Israel war with Iran, however, marked a decisive split between the conservative commentator and the president. Carlson now argues Trump has abandoned his America First agenda and allowed Israel to drive US foreign policy. He spoke to Michelle Hussein on the Michelle Hussein Show.
I'm seen as disloyal. First of all, loyalty goes two ways. Second, the loyalty that matters is the loyalty of our leaders to the country they represent. Okay. And they're disloyal. Trump has been disloyal to the United States, totally disloyal to the United States. He cheated on the United States with a foreign power. So I'm not the one who's been disloyal.
President Trump, all by himself, without Benjamin Netanyahu by his side, has said the ceasefire is over. Isn't the more honest and direct thing to do hold him fully accountable for his actions as the most powerful man in the world?
I don't think he's the most powerful man in the world. I have held him directly accountable. It's his fault. He's the U.S. president. He was elected. That's his job. And a huge part of the job is resisting pressure from outside forces. I mean, many presidents have, to varying degrees, resisted, attempts to control them from outside. And he didn't. So he's weak.
Now, a White House official said no country or leader pressures President Trump to do anything, and he makes decisions based on what serves America's interests. You can watch the full episode of the Michelle Hussein Show on Bloomberg.com/videos or listen wherever you get your podcasts. For added context and to read Michelle's notes, visit Bloomberg.com/Michelle.
OK, well, one thing that the president has been doing and has made a decision on is, number one, accusing China of interfering in the 2020 elections, of which the US intelligence agencies say that there is little to no evidence at all of that, and also restricting visas for Chinese journalists in the US. And we've had a response from the Chinese foreign minister to part of those decisions. China saying that it may take countermeasures, and we know that China does see reciprocity, I forget my words out, when it comes to things like journalist visas, and we've seen that in the past. So the Chinese journalists will be restricted on these decisions in the US to 90 days in the US. You can imagine that China will reciprocate then, because that is typically what they have done. China rejecting the new US rules on journalist visas, according to this briefing from the Chinese Foreign Ministry, saying that the US should cancel the changes, also saying that China has never interfered in US elections.
Coming up on this programme, we will discuss defence. We'll talk about defence tech, in fact, and innovation with the CEO of a European defence startup, Kraken Technology Group, now highly valued here in the UK. We'll talk about the future of defence spending in the UK, in Europe and beyond. This is Bloomberg. This is the opening trade this Friday, and this is what it looks like 30 minutes into Friday's session. We are negative across European stocks, not by as much perhaps as we thought, which is interesting because US futures are still in negative territory, but there's a lot more tech exposure there, and that seems to be where the weakness is. Speaking of which, the FTSE 100 doesn't have so much of that, and so it's up by 0.2%. Also up with the oil price looking kind of firm as we go to the end of the week. The CAC 40 then and the Xetra DAX both down, Tom, by around 0.5% as we focus on the negativity around tech and a little beyond.
Yeah, it's not a rout that we're seeing in Europe. It was a rout, certainly in Asia. So you have about 318 stocks right now in Europe in negative territory. On the upside, you've got gains coming through for about 266 names. Volume's just a little lighter versus the 20-day average, just by 5% or so. Let's flip the board and have a look at some of the leaders today. In terms of that safe haven tilt, you're seeing beneficiaries within the tobacco space, dividend play. We've seen that yesterday as well. British American Tobacco then up pretty strongly today, up 3%. Volvo Trucks coming through with an earnings story that is seen as supportive and investors rewarding that stock right now, up 1%. And a very strong session as well for EQT over in Sweden. That stock rolling about 10% again on an earnings story there. Flip the board and have a look at what's on the downside. ASML, again, despite the fact that it came out on Wednesday with a strong set of numbers, post those numbers, you've seen this weakness, and that continues today. Broader ramifications, of course, of the sell-off in terms of the chip story. ASML is down 3.5%. ST Micro, also part of the same story, weaker by more than 5%. And Burberry coming through with some numbers suggesting there is strength in the US market, that maybe the turnaround story is improving, but nonetheless, not enough to satisfy investors, at least for now. That UK listed stock currently down 5.3%. Anna.
Tom, here are some of the other stories that we are covering this morning. SpaceX shares fell in late trade as it scrubbed the latest test launch of its Starship rocket. CEO Elon Musk says some of the rocket's Raptor engines did not fire, triggering an automatic shutdown. He says the next attempt will probably happen early next week, with 2 of the engines to be replaced. The US has launched fresh strikes against Iran as hostilities across the Middle East continue to escalate and shipping traffic slumps in the critical Strait of Hormuz. Iran responded by attacking US bases in Kuwait, Jordan and Bahrain. The Kuwaiti armed forces said they intercepted 32 Iranian drones targeting, quote, vital institutions, with falling debris damaging residential areas. And over to Ukraine, where Volodymyr Zelensky is working to contain anger over the abrupt dismissal of Ukrainian Defense Minister Mikhailo Fedorov. Zelensky is now saying Fedorov remains a part of his team, even as Fedorov insists he has turned down the position as a presidential advisor, deepening a rift with the country's ruling elite. Fedorov's firing triggered street protests across the country and dismay among foreign allies, exposing tensions inside the Ukrainian military. Tom.
OK, well, let's stick with at least one angle on the military and what we're seeing in terms of autonomous warfare, because as warfare is reshaped by recent conflicts, both, of course, Ukraine and Iran, the defence industry is looking to innovation for the future. Our next guest is a former speedboat racer who spent years breaking records before starting a company to build boats without crews. That firm is now the latest European defence startup, worth north of $1 billion. We're joined now by Mal Crease, CEO of Kraken Technology Group. Mal, good morning. Thank you for joining us. How would you characterise the state of demand for your products right now?
Good morning. Yeah, the market is getting getting very serious. We recently completed a $175 million Series B fundraise, supported and led by the Digital Transformation Capital Partners and a number of European backers, including the British Business Bank, the NATO Investment Fund, and Rheinmetall. And really the fundraise is a validation of our technology and operational capability. We are currently operational in 2 conflicts on two fronts, and I don't believe any other USV company can make that claim.
Can you give us a sense of the kind of contracts that you might be signing, the defence departments you're working with? What is US demand looking like? What is European and UK demand looking like? Are you will be and expecting to sign significant additional contracts in the months ahead?
Yeah, so we are currently on contracts within NATO Europe and multiple contracts within the US, including US SOCOM. And that demand is increasing exponentially and globally.
Good morning to you, Mal. So you have contracts in the US. It's interesting because there's a lot of focus on Europe supplying for Europe, and yet there are plenty of companies in the UK who will also supply to the US. What do you think about that sort of defence sovereignty conversation right now?
We are working very closely with the Royal Navy through the Beehive contract and the expansion of hybrid navy. So we are close to the UK, obviously, but the way the The platforms have been developed, allows them to be completely interoperable. The architecture is open. It's following a similar path to what you've seen in the air in the Ukraine and other operational areas. And really, it means that the product is designed to be used anywhere and by anyone. It's more of a plug-and-play solution than a vertically integrated tech stack, which, of course, limits the ability to expand globally.
And you're talking there about the UK Navy. What do you make of the defence investment plan as it stands, Mal? And as we wait for a new leadership of the Labour government, what else needs to be done?
I think at the moment we have to wait and see. Obviously, a very clear statement of intent has been made, and now it's about execution. So whilst there is a transitional phase in the UK currently, I believe that this will all be completed very soon, and we look forward to participation in the forward programme.
Mal, what can your boats do that legacy naval assets can't achieve? And what are the autonomous functions that they currently have and will have in the future?
So the 5 pillars around which Kraken were built were really high performance, low cost, the ability to rapidly scale, the ability to implement modular payloads, and essentially to make sure the platforms were reliable. And that is now winning through and is reflected by the orders. We are seeing a demand for mass sense and effect, the ability to interoperate between NATO partners and to repurpose the platforms through the use of modular payloads. Last week, we successfully deployed through airdrop, which means that we can now send these platforms anywhere in the world. And essentially what that gives the customer is disaggregated scale. So our current manufacturing rollout will be accelerated by this investment. Last week, the Chief Secretary opened a new 35,000 square foot manufacturing facility here in the UK for us, where we can now build up to 1,000 vessels a year across the UK and Germany. As we move into the second half of the year with funding in place, we will be standing up operational manufacturing facilities in the US, in the Baltics, in the Middle East, and in Asia Pacific.
Mal, why is it that you're able to produce these craft more cheaply than some of the bigger legacy defence players? Is it that they haven't turned their attention to uncrewed submarine vessels, or is there some other reason for this?
I believe it's a combination of automotive techniques. Many of my team originate from the automotive industry, which is about scale manufacturing. We keep the products simple. We keep the supply chains running, and I think the cost point as well. The fact that these are essentially attritable platforms means that you can buy scale and mass at a relatively efficient price point.
Now, what do you say to investors in terms of how you differentiate the product, the portfolio, and what you do as a team versus the likes of Anduril in the US or Helsing in Europe?
Well, as you may be aware, we are closely partnered with Anduril, and that partnership is growing exponentially. In Europe, there are limited numbers of companies operating in this space. But I think much of our success really comes to our heritage. We are out and out, through and through boat guys. We've been doing it for a long time at a very high level. And I think that the surface maritime domain is hard. You need to understand boats in order to be able to make a great product. And we have seen a number of companies come into this space and try and solve this problem with software alone. This is genuinely a hardware problem around which you can layer software and payloads and other capabilities on top. So we got the hardware right, and now we have full optionality in terms of where we go from here.
OK, we'll continue to monitor the story then. Mal Crease, Kraken Technology Group CEO. Mal, thank you for your time. There's more coming up.
Yeah, absolutely. So that's the defence story this morning. Coming up, we'll talk to Claire Barkley, chair of the Industrial Strategy Advisory Council, about the state of the UK industrial growth story as Andy Burnham heads to number 10 Downing Street over the next few days. That is next. This is Bloomberg.
Welcome back to the Opening Trade. We are almost 45 minutes into the Friday session. You are seeing some negativity across the equity space, down 0.3%, but not quite as bad as maybe had been suggested by the futures. US futures are pointing lower by 1.7%. Two key catalysts on the downside is the continuing sell-off in semiconductor stocks and AI-related names, and higher oil prices as well. Brent is currently trading up 0.5% at 84.63. Anna.
Let's turn to UK politics then, Tom. Bloomberg understands that the incoming UK Prime Minister Andy Burnham is preparing to announce new North Sea oil and gas drilling within days of taking office. He's also preparing to bring Thames Water into public control in some form. Andy Burnham is set to be confirmed as the next Labour Party leader today and as Prime Minister on Monday. Joining us now is Dame Claire Barkley, chair of the Industrial Strategy Advisory Council. She's also Microsoft's Enterprise and Industry EMEA President. Claire, nice to have you here with us. Thank you for joining us. So, I mean, do you have any insight as to what the industrial strategy for this new version of the Labour government is going to look like? What should we look for, do you think?
Yeah, well, firstly, thank you for having me on what is an important day today, right, with Andy being announced as the Labour leader. And obviously will be announced as Prime Minister on Monday. I think most importantly, it's just such a critical time for the UK for growth. And I think from some of the mission and vision that Andy, the future Prime Minister, has set out, he does really believe in growth across the country. And making sure that is distributed like across all the postcodes using his catchphrase. So I think that's where the focus is going to be, and obviously as part of the industrial strategy chair, that's where we're focused and making sure that we support that.
Okay, and so the industrial strategy then backs 8 sectors. We'll see
that's right.
whether that's the same sectors that Andy Burnham, as leader of the Labour Party, wants to back. But I'm sure there'll be some continuity because they look like to some degree the sectors of the future, I suppose. How does that fit with his city regions focus then? Are we going to be back to enterprise zones and regional development agencies and all the things that we've studied in the 80s and 90s to see if they work?
Yeah, I mean, the 8 sectors have been picked, as you said, because that's where growth comes from in the country. It's also, if done well, will contribute to well-paid jobs, right, which is exactly what the mission for the Prime Minister that he's laid out. So I expect there to be continuity. Of course, there'll be tweaks. Every new leader that comes in does that. And actually, the place interjection that you've made reference to is also a really important part of the industrial strategy. London is a very central economic hub, as you will well know, and there's a lot of regional disparity in the UK. And so I think making sure that we get the other counties across the UK growing in a more effective way could unlock something like 47 billion if you've got the next 8 cities growing at a more rapid rate. You've obviously seen the work that Andy Burnham has initiated in Manchester. And actually taking the learnings from what we've done in Manchester, unlocking that for other places around the UK is really what's going to drive future growth and good jobs.
Concentration works, though, doesn't it? If we look at Silicon Valley, that's an example of where concentration of talent, of capital, of innovation, of startups and mega caps proves incredibly globally beaten success, and you know that because you work for one of them.
I do. Yeah.
So what's wrong with concentration? What's wrong with leaning into London?
Yeah, I think there's nothing wrong with the success that we have in London. I think if you compare that to other European countries in particular, there's massive concentration in London, which, of course, to your point, we have to continue that growth and innovation, particularly for the tech sector, for the scale-ups, for private equity businesses, etc. But I think if we can take some of the learnings from Manchester and think about how to scale that to sort of other cities in the north and other locations, then that would increase the growth. And if you take the 8 industrial sectors that we have and think about the intersection of place, like clean energy in the northeast, you think about military and drone innovation down in the southwest. You think about agri-tech in Wales. So I think if you can try and think of the intersection of both the industrial strategy plus the place, then we can have the best of both worlds, right?
With your 2 hats on, industrial strategy and tech, what would you say is a priority for the tech sector right now, the tech ecosystem? What should be top of the in tray when it comes to that sector for the incoming Prime Minister?
I mean, the good news for the UK is outside of US and China, the UK and London in particular is an absolute epicenter for the tech innovation. We've got some of the best scale-ups, we've got the universities, we've got all of the research. The things that need to be unlocked, more access to finance, more access to skills to enable businesses to scale up. There's still too many businesses getting their funding from US, Singapore and others, and we need to make sure that we keep the businesses here and we help them grow and scale.
Claire, you mentioned one of the 8 sectors, clean energy, the clean energy industry, and you flagged the northeast. We've got some reporting from our colleagues that suggests that Andy Burnham might be about to give the OK to oil and gas drilling in the North Sea to some degree. We will wait to see if there's any details there. The conversation often becomes quite polarised between one or the other. Should the clean energy industry take any message from that or not?
No, I mean, I think there's, again, it's one of the priority growth sectors. There's huge growth opportunity and innovation that's coming from that sector. I think this is always a balance, and if you think about some of the geopolitical things that are going on, I think they're trying to look at what the balance is, but clearly that's the government's decision to make. So.
Yeah.
What do you make of proposals to take Thames Water into public ownership? Do we get more? It seems like this is an incoming Prime Minister who wants to be more assertive in terms of public ownership.
Yeah,
is that something that is broadly welcomed when it comes to strategic assets? Has that shifted?
Yeah, I mean, that's not... I mean, again, I think for the incoming Prime Minister, he's going to have to make those decisions, but I think it's well reported some of the challenges that Thames Water is facing. And obviously behind that is jobs. Clearly, water is a critical infrastructure for the UK, and so we have to make sure that that's secure.
Yeah, advanced manufacturing is another area of focus, I know, for your strategy. Do we have skills shortages in that area? Is that something that holds back, having been, at the forefront of manufacturing many years ago, and still with a manufacturing base, but really importing a lot of manufactured goods now? I mean, do we have skills shortages in some of the areas that you're trying to build out?
Yeah, and I think if you think about kind of some of the regional city focus that we talked about, I think making sure that you have the right intersection of the industrial strategy and the place, and that you've got the provision of skills for good jobs. I think if I go back to some of the learnings from Manchester, the intersection of all of that is what's driven growth in Manchester. And so I think a very clear focus on the jobs plans as part of the industrial strategy across all of the 8 priority sectors is going to be critical, including advanced manufacturing.
For the international audience, then, Claire, what is it about Manchester and the success there, leaving aside the politics and what that's done for his profile, but what is it about that, what can we actually see in the evidence as the success that he then wants to take nationally?
Yeah. Well, in fact, the Industrial Strategy Advisory Council is about to publish a report exactly on this. You can kind of look out for that. But I think there is a combination of things. There is an enormous amount of collaboration between government, academia, business. So they bring all of those. So there's a great level of collaboration that comes on. And I think as a result of that, they matched skills requirements to the business needs. They obviously had inward investment as well, so they were able to attract a large amount of FDI. You had large businesses like the BBC and others relocating to there, and so you think of all of that. So I think the takeaway from it is it's about taking the very best of the assets that you've got and then building a really strong partnership between business, skills and capability in order to do that.
Claire, thank you very much indeed for coming in. Really important insights as we count down, of course, to the incoming Prime Minister taking that role on Monday. Claire Barclay, Chair of the UK Government's Industrial Strategy Advisory Council. Let's bring in Bloomberg Markets Today editor Morwenna Coniam now for another take and a market's view on what is happening in the UK. Morwenna, we're seeing gilts gaining today, so yields are down, despite the fact that oil prices are up about 12%, 11 or 12% by the end of this week, and we know that as a factor in terms of the movements around gilts. We do have the politics, of course, and change at the top. How are you thinking about UK assets? What's priced in? What's not priced in? What's kind of standing out to you at this point?
I think the obvious thing is that it's going to be no surprise that Andy Burnham is going to be Prime Minister next week. And that has been priced in for some time. You know, the bond market was a little nervous about that at the beginning. He then backpedaled on some comments about not wanting to be in hock to the bond market. So in some ways, we've seen a relative period of stability, and the volatility that we have seen has been very much macro-driven. It's been very much driven by geopolitics. And as you mentioned today, you know, oil prices aren't actually having that much impact, but that is something that's really been the driving force. I think as we get more details about what Andy Burnham's premiership may look like, we may start to see a bit more movement, because there is so much uncertainty and there's so much that has been unknown. In some ways, maybe people have just been biding their time, waiting to see. There's a certain amount of risk that's been priced in ever since it became clear that perhaps Keir Starmer would not be lasting through the year. So I think there's a lot of wait and see to be there. And what we have, you know, we've seen the pound strengthening, but that, again, it's not necessarily connected to domestic politics, if except for a little bit of relief every time things maybe aren't going to be as worrying as people think.
Yeah, just briefly, we're still waiting for confirmation, aren't we, about a Chancellor? We're waiting for all the positions to be filled, and of course that comes after he's becomes the Prime Minister. But the Chancellor news, there are some attributed that to the pound, and others said no, it wasn't really about that.
Exactly. I mean, there's definitely a lot of other factors going on. People have pointed out that sort of options were leveraged already. We've also had to look at what's happening with the dollar, which has really been driving a lot of currencies. And so I think that there's still quite a lot to see what happens there. Certainly, as the currency does tend to be a lightning rod for political instability. But so far, I don't think we have enough details for that to be a very clear reaction. But as soon as a policy is announced that the market doesn't like, I suspect we will see some movement.
We will know about it. Morwenna, thank you very much. Morwenna Coniam will be covering it on the blog, of course. Thank you very much for that. Well, Tom, that is it for the end of this programme. Time for us to look ahead to the weekend.
You're off to the movies.
Everybody else has the rest of their work day to deal with, but we're almost done. Yes, I am off to see The Odyssey, because, you know, real life is not full of drama enough that you need an epic.
96% on Rotten Tomatoes.
That sounds
96%.
high.
It's had amazing reviews.
Will you be tuning in for the
Matt
third
Damon.
place playoff in the World Cup?
Do you know, I'm really torn on that, but
you?
I will be supporting Spain in the final.
In the final.
As I imagine many English fans will be. That's 8 p.m, of
That'll
course,
be a popular
on
view
Sunday.
in England. That is it for the opening trade. The Pulse is up next. Have a good weekend, everybody. This is Bloomberg.